Hey guys, how's it going? My name is Tom. Welcome back to another video. Today we're going to be talking about why the 2024 to at least now 2026, maybe even until 2028, feels like it's impossible to make good investment decisions unless you're lucky or just holding on to whatever investments you are and it happens to work out. But for everyone else, it feels like a very tricky investment cycle. Now, I believe, and the data shows this, is that the 2024 presidential cycle so far has created one of the most hostile investing environments for anyone who's not politically connected, institutionally hedged, or running algorithms that could trade policy risk in milliseconds. We see this all the time. Just today, let me show you. Take this for example. On Polymarket today, a website that just seems to be made for insider trading, anyone who's in Trump's organization and gets a head up could just make millions of dollars, $500,000 by literally doing nothing. For example, just a day before Trump announced the pretty much kidnapping of Venezuela's president, someone put a $30,000 bet on Polymarket that this would happen. A day later, they made $500,000 basically. Seems fair, right? Well, not really. That's not even to talk about all the weird tariff-related bullshit where, Trump said, hey, right now is a good time to invest in the markets, and then he changed the tariffs and suspended them for another couple months. Then after that, tons of insiders had apparently bought the same stocks that were going down. And that brings me to my first point, why investing is so hard right now is because markets are no longer driven by fundamentals. They're driven by executive risk. In normal cycles, investments are driven by earnings, growth, productivity, innovation, monetary policy, but that never really is true anymore. Right now, it's about tariffs, sanctions, military actions. We just kidnapped Venezuela's president, and if you remember last year, we almost went to a war with Iran that caused the stock market to go 10% down in one day. Regulatory threats, and these are all things that happen all the time. Let's say you're putting money into Nvidia, and then Trump's like, or maybe even Apple, then Trump's like, hey, we're going to put tariffs on Apple iPhones. Stocks go down. And then a week later, Tim Cook gives them a golden iPhone basically, and he's like, okay, the Trumps are gone. So this whiplash is just absolutely crazy. Maybe if you just held your stocks all year, put some headphones on, closed your eyes, and just invested in everything, maybe you're okay. But for a lot of us, that's not really how we invest. We try to make decisions, make smart decisions, and honestly, the more decision making you've been doing lately, probably the worse you've been doing. And even if you did invest in Nvidia and stuff like that, it's still 10 to 15% down right now, at least according to what it was last year during its peaks. That's not even to talk about the implications of just being a retail investor when it comes to tariffs and how it affects various companies, but it also affects like their fundamentals. So supply chains become unstable, input costs rises unevenly, inflation metrics get distorted, corporate guidance becomes unreliable. One thing that I noticed is that tariffs have kind of warped GDP a lot. A lot of companies flew in products and stuff like that because they're worried about tariffs. This makes it seem like GDP is higher because it seems like more goods are being produced. But in reality, it's just like an inflated metric because they tried to rush it in before tariffs. So tariffs also kind of like, not only are they making it hard to invest, but they're making it so companies behave oddly and hard to predict. That's, I think, why we're seeing a lot of companies like Crocs and Costco suing Trump actually for a lot of these things. And for me personally, I've been in cash for a little bit and safe treasury bonds, but even this is kind of like annoying because I think the recession risk is really real, and that's the base case for the channel. But the problem is that Trump could just like invade Venezuela, and who knows what's going to happen tomorrow, right? But maybe it makes oil go down, maybe it makes interest rates go down. So a lot of things could actually go up. And it's like, how was I supposed to know Trump was just randomly going to kidnap, the president of Venezuela? I'm not some Polymarket insider betting on this, like getting signal messages. Hey, Trump's going to kidnap a guy tomorrow. Let's put it on Polymarket, right? And that leads me to my next point is that it's hard to make financial decisions when it comes to investing because a lot of the data can't be trusted anymore. If you've been following any of the political kind of stuff when it comes to the data, you'll know that this is true. GDP, employment, inflation, credit spreads, a lot of this stuff is a good indicator, but a lot of that data is flawed right now. GDP data is lagging. The shutdown caused a huge gap in data. Tariffs inflate normal activity while not really improving actual productivity. There's a lot of quirkiness to the data right now that just doesn't really make sense. Sometimes data comes out and people are like, this can't be real. And honestly, I kind of agree with a lot of that. I feel like the economy right now is suffering more pain and hardship than is actually true, and that might mean the stock markets keep going up and up and up and up. And when reality does come crashing down, fortunately for people like me who have cash and safe treasury bonds, we're going to be the ones that are rewarded, not people making risky investment decisions. But until then, it's going to be kind of painful, unfortunately. Not only that, but even good outcomes are hard to trade. Let's say things go right. Inflation goes down, Fed cuts rates, and global tensions ease. That should be bullish. But at the same time, rate cuts usually mean economic weakness. Cooling inflation means people could be buying less, and peace headlines could kind of reverse like some of the bullishness around the defense sector. So it's kind of like it's hard to win either way. Me personally, I'm betting more on the bearish case than the bullish case because I think we just haven't had a recession for a long time. The cycle just seems to be kind of winding down. We see a lot of volatility right now, which is typical of late cycle scenarios, and a lot of companies like Nvidia and some of these things that have led the way have dropped down significantly. Even stuff like Meta is down 15%. So that's kind of how I'm trying to look for things. I think the psychological toll is also something that has affected me specifically. People are just getting tired. They're second guessing themselves, regretting whatever choice they make, and that's definitely true for me. Crypto I thought was going to do a lot more this cycle than it ended up doing. It was mainly just Bitcoin. Altcoins were pretty much a scam this cycle. So that didn't work out. And it's hard to kind of just predict what's going to happen because any day things are just going absolutely crazy. Trump could just die one day. There's all these bruises all over his hands. I read an article that said he actually had a hole in his hand. I have no idea what to believe anymore. If Trump just magically died one day, maybe JD Vance becomes president, he fucks everything up. Maybe he doesn't. I have no fucking idea. And that's kind of my main point with this video. So let me know what you think in the comments down below. If you could relate, give me a subscribe, like, and a comment to help boost the algorithm because this channel is just starting off. And if you like no BS takes like this one, let me know down in the comments down below.